Welcome everyone to the ESG Demystified training series. This is session 1, which is ESG and public sector. Today you're going to hear from myself, Dominic Brindley, who's the head of the public sector team here at NatWest Markets. We've also got Dr. Arthur Crevers, who is head for corporates of sustainable finance here in NatWest Markets, and Rishi Madlani, who's the head of sustainable banking for NatWest Bank. If I could move to slide 2, we're just going to run through an introduction to the training series and what it means and what we're hoping to deliver for you. Looking to make the series of ESG accessible to Treasury and finance staff, going to be taught by a range of NatWest experts, focusing in on ESG aspects most relevant for the public sector. And what we will be doing is taking feedback on each session and shaping the delivery of the series as we go, starting with basics and moving to slightly more advanced perspectives in terms of as we move through the series. If I could move to slide 3, just going to give a brief overview of today's training topics, what we're going to run through, some basics, brief history of sustainable finance, contemporary drivers, be they societal, political, regulatory, or from an investor perspective, an overview and a bit of reflection on public sector and ESG, and hopefully bring together some of those themes that we're going to discuss, and then talk about the relevant case study in terms of NatWest and transformational aspects on the organisation. And with that, I'm now going to hand over to Arthur, who's going to pick up the next section.
Excellent, thank you very much, Dom. And indeed, we'll be commencing with the basic jargon of sustainability and sustainable finance. And if we turn to slide 5 of the presentation, I think this is an important aspect to sustainability and sustainable finance. We really have 2 lenses that we apply. The first lens, more of a macro lens, applies to the entire company or the entire organization. Really think about how well is the organization setting sustainability targets, what's the quality of their environmental, their social disclosure, are they signed up to important international initiatives such as the Paris Agreement. And clearly in the context of finance, I would apply to all of that organization's liabilities, be that equities, be that bonds, be that loans, etc. And we have a developing industry of ESG rating agencies and scoring data providers that are assessing that. The other lens is really more of a micro lens, and it's not looking at the entire organization, but a specific project or asset that is being financed, that is being analyzed, that the organization is starting. And this comes to the fore in the context of instruments such as green bonds, where the money is being used specifically for projects with perceived environmental benefits and advantages. So the role of the organization is still important, but it's secondary. The primary analysis is of the quality and impactfulness of the project or the asset being financed. And here, again, there are a range of market standards set out, particularly by the International Capital Markets Association, ICMA, that defines what kind of projects are green or are social. And I think that takes us quite nicely to the next section. So slide 6. And again, I guess a little bit of level setting when we talk about E, S, and G. What do we mean? E clearly are the environmental aspects. Yes, climate change is a very critical and urgent element to that, but other areas such as biodiversity, pollution prevention play into the E aspect as well. The S, social, clearly the people factor, and particularly there is a focus on an organization's role and impact on disadvantaged groups and communities. And then the final one, the G, the governance, is often seen, often in the background, as one of the more important ones, in that it's consistently applied across different sectors, across different organizations. And there's a sense that you can have all sorts of environmental and social targets as an organization, but if you don't have the right governance, the right setup of the organization, you'll struggle to follow through on those commitments and those promises. So governance, be that as applied to the board and the organizational structure, or be that as applied to the products and services of a company, is also very important. And then the context of financing instruments, you'll see there, the bubbles at the bottom are some of the most common terms you'll come across. Green and social bonds, aligned again with the E and the S. Then sustainability bonds or sustainability debt means a combination of both. So projects being financed that have environmental and or social benefits. And then there's this emerging asset class of sustainability linked bonds and debt instruments, where the focus is not so much on how the money is used, but there is a focus around a particular sustainability target that the organization needs to meet. And if the target is not met, that has an impact on typically the pricing of the instrument or any other characteristics such as maturity. Moving on to the next section, I guess setting the scene a little bit on slide 8, providing a brief history of the evolution of sustainable finance. You'll see that this type of thinking and investments really evolved in the 1980s and 1990s, particularly through very specific equity-focused divestment campaigns, such as the anti-apartheid movements, but also with the oil and fossil fuel campaigns that sort of started in that period. In the sort of 2007, 2008, so the first years after the global financial crisis, you saw that this type of thinking move into the debt asset class. And a very important milestone there was the emergence of the ICMA green bond principles, which was set up predominantly by development banks as a way of structuring any debt financing that they were to do that had environmental focus. It still was largely a sort of a European-centric concept, though. It wasn't as widely known and understood more globally. And I think it's fair to say that in the last 3 or 4 years, you'll see the third column there, it's become the new mainstream. There's been significant momentum and acceleration of momentum behind sustainable finance, driven by a range of important stakeholders, which I think is nicely encapsulated in the next slide. So if we go to slide 10, and really here, this is a very high-level summary of the financial ecosystem, and a message we often give when presenting this is that sustainable finance and sustainability considerations are a fundamental game changer to the capital markets and to the flows of finance. All of these players here play an essential role in that, and their responsibilities will be, if they're not already, fundamentally altered as a result of this type of thinking and this type of prioritization. You'll see here we've set out 4 specific drivers: the societal driver, the political driver, the regulatory driver, and the investor driver, which I'll briefly talk to. Firstly, around the societal driver, if we go to slide 11, what we set out here, I think, are two very important effects, which I think you'll be very aware of as well. I think one is the generational effect. I think any survey you look at now makes very clear that millennials, that Gen Z, are deeply concerned about a host of ESG and sustainability topics. And that concern is driving their decisions when investing money, when deciding on employment decisions, when deciding on consumption decisions as well. And clearly that generational change is accelerating the movement towards more thinking around sustainable finance. I guess most noticeably in the public eye are some of the campaigns we set out on the top right. And clearly these are campaigns that have captured a lot of people's imagination and have been very important in also adding further pressure to political and indeed to financial stakeholders in taking not just the environmental agenda, but a broader societal agenda more seriously. If we go to slide 12, what the map here I think really nicely shows is the broad political consensus that is starting to emerge around some of the most pressing sustainability topics, in particular around climate change. So what you see there colored in green are all the countries that have ratified the Paris Agreement. And what you see there is that clearly that includes much of the globe. It includes countries with all sorts of different political and cultural systems. So I think that level of political urgency has led to the formation of a variety of bodies at a G20 level, at a European level, at an Asian level, to really think through new sets of policies to accelerate the carbon transition in particular. In terms of the next factor, so if we go to slide 13, this is less well covered in the media, but actually from a financial point of view, it is essential. What we've started to see emerge as well is a broad coalition of central banks and financial regulators that are embracing the carbon transition that needs to happen. And a very important network for that is the NGFS, one of many acronyms in this space. It stands for the Network for Greening of the Financial System. And their goal is very much to introduce new forms of financial regulation that can stimulate that transition. And the philosophy there is quite straightforward. If investors and banks are at the forefront of the carbon transitions, if the criteria that the banks and investors are setting take that into account, that forces the real economy, so the companies we lend to, the companies we provide capital to follow suit. So again, that's an essential body to follow, and that's already starting to execute real noticeable regulatory change in this space. In terms of the investors, on slide 14, again we've seen a steady growth in the assets under management that are actively incorporating ESG considerations into all aspects of their investment selection and management process. And you'll see there on the slide, we're tracking one particularly popular initiative, the United Nations Principles for Responsible Investment, that commits an investor to exactly that, to incorporate ESG considerations into each aspect of their decision-making process. And you'll see that we've passed now the $70 trillion mark of assets under management. So it is very much becoming the new mainstream. And again, there's a variety of reasons for that. I think investors are now increasingly finding that it's not just an ethical thing to do, but it's increasingly also becoming a commercially essential thing for them to be embracing. It's becoming more and more clear that asset owners are moving their money towards investors and towards investment portfolios that have a credible ESG process. With that, let me hand it over to Dom to take you through the next section.
Thanks very much, Arthur. I think what we wanted to do on this next slide was just take 2 minutes to observe how sustainability is relevant to the public sector and perhaps the sustainability agenda more broadly along some of the lines that we've heard from already. I'm going to outline a few high-level considerations for specific client subsectors which we've listed at the top, and perhaps a few key drivers to consider within that. As I said, we've seen some unprecedented recognition of the climate emergency, as we've heard, mass climate protests, school strikes, warnings from the Bank of England, and new advice from the Committee on Climate Change, urging the government to set a new target to deliver net zero greenhouse gases by 2050. So as I pick out some of the subsectors that we've listed, in terms of why sustainability is important, and from a Treasury perspective, from a local authority perspective, I think we've now had over 60% of councils in the UK have now declared a climate emergency, and over half of these have declared trying to be net zero by 2030. Local authorities themselves obviously responsible for the operation of significant infrastructure across the UK, including housing, schools, as well as a large amount of the UK's transport network. And as such, they're going to be a very critical part of the ability for the country to achieve its targets by 2050. From a university perspective, as we've heard from Arthur earlier in the section, there's an increasing awareness of the climate challenge, and this is leading students and millennials taking greater interest in how sustainable the organisations they are attending from an education perspective actually are, and also increasingly as centres of excellence for research, universities at the forefront of building both on existing capabilities but also on future capabilities for us to be able to achieve and create a zero carbon future. And finally, on the housing association side of things, sustainability is key. Housing associations themselves own and manage over 4 million individual housing units, which is 18% of the stock of UK housing. And it's quite critical, and one of the examples here would be the ESG white paper that the sector has taken upon itself to produce and harmonise the sector's approach to ESG reporting to enhance the investment proposition of the sector and ensure that actually the access to liquidity is there and available for the future. Also worth just noting that NatWest, given our role taking the sole bank sponsor position in that process, given how critical we see some of these sectors to delivering on those agendas. So I'm just going to pause there, and I guess in the follow-up sessions we're going to dive into this in some of these considerations in more depth. But with that, I'm going to hand back to Rishi, who's going to take us through the final section of this series.
Many thanks, Dom. As Dom kindly introduced, I head up sustainable finance, and I'm responsible for the just transition at NatWest Group. But outside the bank, I'm deeply involved in the public sector. I'm a local councillor. I serve on the board of a university, just retired from one other university, and on a small LGBT charity. So I do hear and feel your pain today. So hopefully the case study I'm about to take you through shows some shared understanding of the challenges our sector's been through, both recently but also through recent years, more broadly with the funding changes and policy changes. So I'm taking you to sort of where we are in terms of NatWest Group and why we also want to talk to you about this topic and why it's so important to us. So sustainability and how businesses think of their business model has been evolving for quite some time. There've always been layers. Most businesses that make a profit and organisations have aspects of philanthropy and organisational volunteering, whether it's payroll giving. There are things that they do that show some philanthropy. In the last 2 decades, you saw more of the corporate social responsibility approach. You saw people trying to manage a bit more about the risks, and particularly rep risk. And we all know this in the public sector, what the challenges around getting something wrong can be. More recently, people have started looking at what their positive impact can be. And this is trying to think around how do we talk about what our positive impact is and try to accelerate that and do more about it. And even furthermore, and I think particularly with some of the thinking around the Sustainable Development Goals that we mentioned earlier, but also around thinking around what our real impact is. And in some ways, COVID has really shown some of the best of that and the positive impact we can all have on society to try and mitigate some of the worst impacts of something terrible. I know how hard your colleagues and our colleagues have worked to really try and mitigate some of that. And that's been kind of the direction of the travel for the bank in recent years. So in next slide is slide 19, and we in February our new CEO, which we again flagged this, that having a female CEO and CFO puts us quite unique in the FTSE 100 pack, but also an organisation showing that diversity is championed there, launched her new strategy, which is around championing potential, helping people, family and businesses to thrive. This involved us really thinking deeply about our key stakeholders, and we used some of the blueprint for better business to think around how do we make sure we really live our values and think around being a purpose-led bank in everything we do. Without serving customers like yourselves, what are we do? How are we honest and fair with customers and suppliers? How can we really drive and help you on the challenging issues that challenge you, which moves to the working together, because some of these issues in sustainability, particularly climate, are things we can only solve together. Similarly, it's our responsibility to our colleagues to make sure that we are a responsive employer. And this is why issues like climate have come to the forefront, because actually these are so big issues now. Climate has been often considered for many years. Everyone's known climate's important, but only now has the urgency really begun to be understood. And this is something that we're all feeling now and thinking, how do we actually deliver on our requirements in per sector? And then being a good citizen, and we have to balance those needs as well as making a return for our shareholders. So slide 20, small text, but it gives us a bit of a flavour of the three areas our initial strategy is focused on: enterprise, learning and climate. In each of these, we've set out a range. I promise you I won't talk you through these in detail, but these are all available on our website. But setting out an ambition to be a champion of UK business, supporting startups across UK and Ireland. We already have a number of entrepreneurial hubs, which we've brought all online through COVID, but actually are now having their pilot cohort of environmental entrepreneurs through them. Supporting female-led businesses, supporting BAME-led businesses. And this is things we're doing already just in the enterprise space. Within learning, we recognise we have a responsibility to be a learning organisation, but also helping the financial capability of the UK and the skills of our employees. So we already have our leading Money Sense proposition, which is in schools and has virtual. It's gone completely virtual during lockdown, with our newest environmental module just coming out this week, and we've helped 2.5 million people there. Furthermore, we launched a video game. So if you have little ones who want to improve their financial capability, Island Saver had over 1 million downloads and hit iOS platforms just recently. So please download it. It's very playable apparently, and it's got rave reviews. And then finally, climate, which is my main area of work. And we've challenged ourselves to be a leading bank in the UK and Ireland, helping to address the climate challenge. Now, that's no good if we decarbonise our book, just our book. We need to help other banks and encourage other banks to decarbonise their books, but also crucially help you, each of sectors, decarbonise yourselves. We have set a target to halve our finance emissions by 2030, which is a commitment to the Paris Agreement. But that means helping you to decarbonise yourselves and as you align to your decarbonisation trajectories. We've pledged 20 billion of additional financing and funding. Arthur talks about some of the products that we have there in climate sustainable finance, to be climate positive in our own operations, and also to reduce some of our the lending to more harmful activities, which has been in steady decline for quite some period. So to the next slide. I think key thing here, key points to take away here are our own operations. So we walk the talk on this. We were the first organisation globally to sign up to the Climate Group's 3 flagship initiatives and even their recent EV fleets initiative. That's RE100, EV100, EP100, 100% commitment to renewable energy, improving our energy productivity, and electrifying, decarbonising our fleet. Furthermore, this involves lending. This involves changing some of the way we lend. For example, in housing associations, you also have the targets of the EPC targets across your book, and we want to help you with that and come up with financial solutions to do that in a sustainable and affordable way. But it's really important that we are playing our part in society. So I'll end with one specific example of our own green, social and sustainable bond framework. So we launched this last June, as in June last year, and we came to market with our first social bond issuance in November last year. Now, this has been over 4 or 5 years of negotiation with Treasury and understanding the data and how we pull this together. It's been a conversation of where was the best way, understanding what the bank's issuance requirements were, but also pulling together different specialists who probably wouldn't necessarily have talked and spoken in a regular way. So working with Treasury, bringing our sustainable banking teams together, bringing our data and finance teams together, and bringing our front line together to understand what does it mean? How do you what does our lending look like in this book? And some of this involves creating new data, but actually, as in the public sector, the parallel I'll draw is that we have to produce a lot of regulated data anyway. I'm sure many of you are comfortable and understand that pain, and we have, for reporting purposes, to produce a lot of data. Sometimes it's only one step further to think of how we turn that into understanding what the impact is. Our first social bond, involved mapping our loans to the most deprived areas in the UK by postcode, and we created a UK-wide metric that was consistent on unemployment and low GDP growth. And we then created an overlay using economist method, Scottish government method of an input-output table to calculate the number of jobs created. So this summer, we've released our first social bond impact report, where we were able to report that for those investors who had invested in our social bond, they'd helped create an impact of 6,900 jobs across the UK. Now, is this perfect? No, but it's the beginning of that journey to start looking at the social impact of what our lending is. And I really, as institutions and organisations that already have a significant social impact, positive social impact, challenge to you and opportunity for you is to tell that story better and to really think about how you measure and maximise that. And I think a social bond or a green bond or a sustainability bond are real good methods to do that. So without further ado, I'll hand over back to for Q&A.
Thank you, Rishi. Just while we're waiting for questions to come in, just as a reminder, you can type your question using the Q&A button at the bottom of your screen. I'd now like to hand back over to Dominic to continue. Dominic, over to you.
Thanks very much, and that's great. Hopefully the opening slides and content was something that was a good introduction from the perspective, and I guess I'll just pause for 2 seconds while I wait for any questions. So it's probably question first for Rishi, actually, if there's a question that's come in saying, we are new to the ESG aspect, where should we start? Fairly generic one, Rishi, but I don't know if you want to start with that.
No, brilliant question. And actually just being here today and starting that discussion is the first step. Understanding what the ESG opportunities for your specific sector, depending on whether you're a housing association, whether you're a council, whether you're a higher education institute, will all have different drivers. But actually, firstly, just by starting to open up to what should you be thinking about? What are the key deliverables? What is the key purpose of your organisation? And what are those measures you could start with? So I think joining us today, starting to learn a bit more about what are those ESG trends, what could those look like, and what the financing needs you have around that. But I think it's really important to start with having a good ESG strategy, starting to think around what are the environmental, social, and governance impacts of your organisation.
Thanks, Rishi. I've got another question here that says, perhaps this is one for Arthur. It says, we hear a lot about the climate challenge and the E aspects in relation to that, such as carbon neutral for 2050. How important are the S and the G as we hear less about these aspects? Arthur, I don't know if you want to comment first, and then perhaps Rishi, if you want to comment after.
Yeah, I think it's an excellent question, because definitely until last year, the E was very much the dominant component within ESG analysis. However, that has been evolving, and I think there's a growing realization that these are interconnected. In environmental objectives, cannot be achieved while ignoring social considerations, and again, that's where concepts like just transition become very important. But equally, straight on the back of the recent, of course, COVID developments and crisis, has reminded us all that there's some urgent societal challenges as well that need to be addressed. So we are seeing more and more organizations not just set targets and disclosure as it relates to their decarbonization, but also as it relates to their role from a social perspective, so supporting disadvantaged stakeholders, be that clients, be that some employees, be that communities, etc., is becoming more important.
Thanks, Arthur. It's very helpful. Again, just a sort of reminder: if you do want to ask a question, please do type away, or indeed raise your hand if you feel so inclined. I think we've had one more question in which I will ask is in terms of it's from a housing association. What sort of things could a housing association be thinking about in an ESG strategy? Don't know who's best placed to take that. Arthur, is that for you?
Yeah, happy for you to start, Rishi. I can supplement.
Yeah, brilliant. So there's actually quite a lot of work going on in the housing association sector. We've seen that the Impact Investment Institute recently launched a paper that looked at some of the particular threads that housing associations can look at that help you consider. I think HAs are in a really interesting position, because you've got your natural purpose is deeply social, and actually trying to think about what are the additional things you can do for your investors and for the tenants that you serve. There are some real great opportunities there. I think thinking around job creation, particularly in the context of what's happening around COVID and with the broader economic state, but also actually using this time right now to think around what the environmental impacts are. Obviously, the government's new green grant scheme doesn't apply to housing associations, but is there a way that we do something similar and think around what a sector equivalent is and start championing that? So I think social is very much at the heart of what social, putting social back into social housing. I think thinking around what we can do there, there's a lot of opportunities, and I think trying to learn from some of the best practices in the sector is a good idea as well.
I would fully echo that, and then perhaps add as well that when it comes to an ESG strategy, there's always a very fine balance then in thinking about which of these aspects that Rishi has set out can I quantify, which ones are measurable, trackable, and then which ones are perhaps more qualitative but yet very important, be that case studies, be that examples to help illustrate as well. There's a very fine balance between both those elements that investors and other stakeholders are looking for.
And I suppose I would add just a final point on that is the work that the sector's doing and market participants as well around the white paper in terms of harmonising the language that's being used both from housing associations but into investors is a very good step in the right direction. So hopefully the framework that comes from that will help in that regard. I suppose, Rishi, maybe a question following up from one of the ones that you'd answered earlier around sort of where do we start with ESG. There's a question here that's come in saying, our council has just declared a climate emergency. What support can finance bring to that agenda?
And Dom, a great one there. And we've seen a number of local authorities and institutions beginning to declare climate emergencies in the last 12, 18 months. And I think there's been a sort of a collective realization. I've been quite pleased to see on job recruitment sites, lots of councils hiring climate emergency officers. But actually, the bit that always has concerned me is this connected into the strategic planning, the financial planning, and the medium-term financial situations of local authorities. I think there's a huge opportunity to overlay climate into decision making across local authorities. I'm proud to say in the borough I represent, we've done a lot of work in actually formalising that into our decision making. But actually, there's a real opportunity to tap into money available. I think if the much rumoured sovereign gilt, green gilt, is announced in ahead of COP, there will be opportunities for local authorities, and we've seen some local authorities early movers in raising municipal bonds for climate activities. So this and also actually in their key power, in convening power as well. So there's a lot of power local authorities have in bringing together local organisations. But actually, you've got a lot of opportunities through your own fleets, through your own housing stock, to really think about that comprehensively, and hopefully we can help with some of the financial solutions and products alongside that.
I think that's absolutely right, and what you often see for a Treasury team that but besides getting the fundamentals right in terms of the ESG reporting and disclosure, considering a green debt instrument, as Rishi has described, is a very, very tangible way for a Treasury and finance function to showcase its commitment to the overall councils or organizations climate change strategy, and specifically in terms of the climate emergency. When we did the inaugural green bond for Northern Power Grid, one of the drivers was that many of the councils in their catchment area had declared a climate emergency. So there's a very clear linkage with what the finance function can do.
Thanks very much, Arthur. And actually, perhaps just a follow-up final question, if I can, that's come in is we touched on it there around what other markets or other sectors have done. Just on the question on what have European or other market public sector participants done, and are they ahead of the UK in this regard?
I think if you look at continental Europe, particularly Northern Europe, they have been very much at the forefront of tying their ESG agenda to their capital markets and financing agenda, and I think that's clear in the number and variety of sustainable finance frameworks that have been developed. And I think what's an interesting trend there as well is that you don't just have, I guess, more plain vanilla green or sustainable financing instruments that are launched, but you're increasingly also getting public sector entities raise financing for very specific sustainability goals. That could be housing focused, that could be water management focused, or indeed in the last 6 months that has been COVID response focused. So yes, in continental Europe we've seen significant sort of innovation in that area. And perhaps if I can touch on the US, what's been very interesting that at least on the two coasts of the US, that there's been an incredibly well-developed municipal green bond market. And there's a lot of data out there showing that doesn't just make good environmental sense, but those green bonds tend to also come at a tighter price, so more attractive price for the municipality.
Thanks very much, Arthur. And it's always good to hear that with the value for money hat on, that those things are starting to bear fruit on that front. I think for now we don't have any further questions from today's session, and I don't know whether there are any other questions from the moderator perspective. I don't think there are. I can't see any. So on that basis, what I will do is say you very much to Arthur and to Rishi for taking the time to outline their thoughts. And also thank you to you for joining us today.